anticipation, or speculation, I should say, of anticipation of the stake last week as well. Well, let's turn to a stock we don't talk about often, and that's retailer Floor and Decor. Now, this morning, Spruce Point Capital publishing a new short report voicing, quote, grave concerns about the credibility of management and the board, viability of the company's strategy, and accuracy of its financial reporting. We should note, when reached for comment, Floor and Decor said, quote, we are in our quiet period ahead of our second quarter earnings release and will not be able to comment. Well, joining us now in a CNBC exclusive, Spruce Point Capital Management's founder and CIO, Ben Axler. On set, it's good to have you. Why Floor and Decor?
Well, Floor and Decor has both a cyclical and structural issue. Right now, they're very much tethered to the home improvement cycle. They sell flooring and tiles and accessories. We think the consumer's a little bit strapped. There's evidence that home remodeling is declining based upon some what other peers are talking about. But that's only part of why we like it. We think they have a structural problem because they're expanding their store count into new geographies where tile is less accessible for the foundational structure. They're moving to lower income markets. They're ceasing disclosures that they typically give, changing some accounting language. So, we like it as a short, both for the cyclical exposure to the home remodeling cycle, which we think is under pressure, but also structurally, we don't think they're well positioned to hit their financial goals and targets.
Okay. I mean, we know housing is cyclical. We know we're in the middle of this downturn. You got a Fed holding rates higher for longer. Just this morning, construction spending falling unexpectedly. As a company, wouldn't it behoove you to expand at a time of softness so you're ready for that upturn?
Well, we think they're going to be less levered to the upturn. Part of the problem is their capital expenditures and their store operating expenses are growing substantially. We think that's going to weigh down on their earnings potential if and when their customer comes back. So they have two types of customers, the homeowner, kind of do-it-yourself, but the professional contractor. That pro contractor is being courted heavily by Home Depots, by Lowe's, by MSI, which is a direct distributor. So we don't think that customer may come back when the economy recovers, and also there's going to be more debts on the books because they're entering into long-term expensive leases. So we see a lot less upside and a lot less leverage to a recovery.
It sounds like quite a vanilla short. I mean, it's not like you're claiming there's some wild card hole in the financial statement or anything like that. Is it expensive as well? Is it actually fairly cheap already?
Well, that's a great question. So part of the reason we like it is it trades at the highest valuation among home improvement retailers, and if you look at a broad array of building product companies, almost 3 times revenues based upon some of our adjustments. So we want to be short companies that we think are poorly positioned with a weak management and weak governance and a high valuation and leverage that really isn't appreciated. So it kind of checks a lot of our boxes as to why we like it as a short.
So I do want to just go back to this because you do raise questions about some of the folks on the board and management and their history of accounting, raising questions about misstatement or understatement, I should say, of debt. I mean, do you see material, or I guess financial accounting wrongdoings potentially here, or are there red flags for you?
We see a lot of red flags. And so we look at the people, the strategy, and what happened in the past. So a couple board members were associated with Linens and Things. That was a strategy that talked about big store formats, everyday low prices, broad SKU selection. That's exactly the same sort of strategy that Floor and Decor has. Now, ultimately, once Linens and Things store growth declined below 20%, they started missing numbers. They did some financial restatements. Floor and Decor just lowered their store growth below 20%. They're retracting a lot of claims. They no longer report adjusted EPS. They're making some other accounting revisions. So we kind of see a pattern here, a behavioral pattern of what happened with Linens and Things, but ultimately went bankrupt, and what could happen here at Floor and Decor, which could befall the same fate.
Warren Buffett disagrees with you?
Well, Mr. Buffett is one of the best investors of all time, and he's got an enormous, Berkshire has an enormous equity portfolio. This is a small sliver. We fail to understand how this stock reconciles with a lot of his investment principles and maxims. So, I think Warren Buffett's famous for saying, never invest in a business you can't understand. Here we're seeing Floor and Decor retract a lot of statements, a lot of claims they used to make. So the transparency is declining, and certainly we don't think it's a value stock trading at the highest premium multiple in the industry. So yeah, we disagree with Berkshire's assessment on this stock, and that's part of the reason we're short.
So quickly, you initiated this position. Stock on Floor and Decor, it's under pressure, down about 3.5% today. I think the last time you were on this show was Boot Barn, which is up double digits since then. You have a number of companies that you've bet against. Can you update us on your positions?
Sure. So we're still short Boot Barn. We think that they've had a little bit of an uptick as we move into the rodeo season here, and the comps have been improving, but we don't see that sustainable. We still think that business model is under pressure. We talked about MSCI earlier this year. That's been a great underperformer. We're still short that. In fact, there was some news out over the weekend that BlackRock, which is their biggest customer, is buying Preqin, which is a competitor to MSCI's business, Burgess. So we still think that business is under pressure. We're still short. And Zillow, we came on and talked about Zillow. We're still short that. We think that's also tethered to the housing cycle as well, and they're poorly positioned. So we're still short all the names we've talked about this year.
Okay, Ben Axler, thanks for joining us.
Thank you.